And, DFJ, where I was at, we funded SpaceX. And I was in the room when there was lots of conversations on cash, SpaceX and with Tesla. And yeah, you're right. It was tough. So Alchemist is an accelerator for enterprise startups, or funded by 5 VC funds, Mayfield, Khosla, DFJ Foundation, USVP, to build sort of the premier launching pad for startups that build companies that monetize from enterprises.
How were you able to catch this unicorn so early?
I grew up under DFJ. So and DFJ is the venture fund that funded Tesla and SpaceX and Skype. But the key skill set was to understand if something worked out, how big could it get? The biggest mistake is that people don't know what good looks like. If you hate sales and you need to get sales, go meet with 3 amazing salespeople and have them write the spec for you instead of hiring your friend who's, better at sales than you.
Hi everybody, welcome back to Raisable Founders Hub, where we dive deep into the minds of some of the most successful entrepreneurs here in Silicon Valley. And today's guest is Ravi Belani. Ravi is managing director and co-founder of Alchemist Accelerator. It's one of the most successful accelerators here in Silicon Valley. Ravi is also an active angel investor, and he was one of the first investors in 3 unicorns. We will definitely ask Ravi about that. Ravi has invested in much more entrepreneurs, startups, and have worked with hundreds or maybe over thousands of entrepreneurs. Ravi, thank you very much for joining us today. How are you doing?
Thank you. I'm great, Vasil. Thank you so much for having me. It's great to be on.
Ravi, can you tell us a little bit more about what do you do currently in Alchemist and as an investor and entrepreneur?
So I have 2 hats. One is I am the director of Alchemist. So Alchemist is an accelerator for enterprise startups. So we were originally started by 5 VC funds, or funded by 5 VC funds, Mayfield, Khosla, DFJ Foundation, USVP, to build sort of the premier launching pad for startups that build companies that monetize from enterprises. And it's very different than other accelerators like Y Combinator or Techstars, because we only do enterprise startups. So the program, first of all, it's longer. It's 6 months, and some of the companies will take 9 months or 12 months because you need a longer program if you're building something in the enterprise. And we very much heavily focus on quality. So the class sizes are typically limited to 20 companies. And each of the companies gets at least 2 and usually up to 4 coaches that are just working individually with that company. And the difference is that when you're building an enterprise monetizing company, so your users can be consumers, but if you're monetizing from enterprises, you're really building 2 different entities. You're building a product that users will love, but you're also building a business model for monetization that may be different, where your customers and your users can be different. And so that dynamic requires a different skill set in how you build and scale. And that's what Alchemist exists for. So we've been around for now 12 years, and we are really a phenomenal community of awesome enterprise-focused founders that are changing the world. And so that's my day job. So I work it's San Francisco based, but we do have hubs all over the world, in Tokyo, also now in the Middle East, in Doha. But the main program is out of San Francisco. And then on the side, I'm also an adjunct teacher at Stanford. I'm an instructor of entrepreneurship, and I teach the largest entrepreneurship class in the engineering school at Stanford, which is a speaker series. And we put those videos up online. So that's me.
So how many entrepreneurs you've been working with?
Well, in Alchemist, we fund about 60 entrepreneurs a year. And so we've had about 600 that have gone through the program. I think the stats are that I should get I think it's around 340 plus companies have closed rounds. They've raised, on average, it's around $6 million that our companies have raised across, the whole portfolio. I think collectively, the number is between 4 to 5 billion of collective funds raised. And so, I funded 600 founders. And then before Alchemist, I was at DFJ. So at DFJ, which is a venture capital fund, I would be writing Series A size checks. And at DFJ, I was the second investor in Twitch when I funded them as their precursor, which was Justin TV. And then I was also the first investor in Pubmatic alongside Helion Ventures, which is also a publicly traded company. So those are my first 2 unicorns. Then at Alchemist, we've had other unicorns like LaunchDarkly, which, and others that are and like Rigetti, which was a company that went public, which was a quantum computing company.
Interesting. Do you remember what were the check sizes in those unicorns?
Yes, I do. So in let's see if I can actually recall this. In the first check. Well, I guess this is public, but the first check that we wrote into Pubmatic was just 500,000. It was just a $500,000 check, and then the first check into Twitch when it was Justin TV, I think it was like a $2 to $3 million investment check. And then LaunchDarkly, when we funded, that was it was like a $40,000 to $50,000 check. When LaunchDarkly, we were the initial investor through Alchemist. So
wow.
Those are the sizes of the checks. Yeah.
So how many multipliers did you make on those deals?
Yeah, quite a bit. So I think the LaunchDarkly one is probably the most glaring. Yeah, I'm trying to figure it out in my head now. I think it was around 1,000x multiple, like a 500x to 1,000x multiple. But I should caveat that. But it was quite a fantastic, multiple. So,
yeah, but this is actually what is Silicon Valley about. Many people don't understand why investors from Silicon Valley don't want to look even at some traditional businesses, that grow like 30 or 50% even from year to year. And that's why, because we are looking for the unicorns like this. And this is fascinating numbers. So my question is, how were you able to catch these unicorns so early? Do you remember what was unique about them?
Yes, I mean, so the main thing is, and I grew up under DFJ, so I was in that where I learned the venture business was under Tim Draper and Steve Jurvetson and Andreas Stavropoulos and Raj Atlaru, and so these are these were my partners that I was shadowing. And the big thing that you learn when you're at DFJ, and DFJ is the venture fund that funded Tesla and SpaceX and Skype and as one of the initial investors in all of those. And so the big mantra at DFJ wasn't about, it wasn't so much about what could go wrong. You didn't get points for identifying all the flaws in a business. The key skill set was to understand if something worked out, how big could it get? And that's a completely different skill set, is to understand, if something does work, does it become worth 10 million, 100 million, a billion, a trillion? And so, with all these companies, what I was looking for were dynamics where if it does succeed, it could succeed really, really big. And there's a lot of depth to that. So there's, I can't cover everything in just the duration that we have here. But effectively, when you're looking at Twitch and Justin TV, and even early on, the gaming market wasn't necessarily self-evident with Twitch. But it was clear that there was this paradigm shift happening in terms of how people were consuming content and entertainment. And if in fact you believed a couple things were going to occur, there were a lot of factors that would converge to have a marketplace effect where there could be a winner that could become really, really big. So part of the idea here is that it's not just validating product market fit, but thinking about if something does succeed, why is it that an entrenched competitor can't replicate the model, and why is it that a fast follower can't just duplicate what you're doing? And in the Twitch case, there was a lot of issues that would prevent any of the big media companies from trying to replicate what they were doing, and also they were iterating so quickly, and that team was so good at picking up insights that it was going to be too late for somebody to try to follow them by the time they knew what they were doing. And so, it wasn't an easy investment in the sense that, a lot of the team thought that it was a crazy investment because at the time there was a lot of, IP streaming on the platform that was not allowed. They were doing a lot of sort of quote unquote illegal things. So there's a lot of reasons to poke holes into why it wouldn't work. But the thinking was that if it did work, it could have become a phenomenon, and it did. It was sort of a really lucky thing. The other heuristic that's used is you look at the team, and as Michael Siebel was the CEO at the time of Justin TV, who's now part of the leadership at YC. But the team between Justin and Michael and the others on the team was so fantastic because they all complemented each other. They're very different personalities, and they complemented each other really, really well. And so, to the extent that you believe that a market was going to emerge, you're looking for a team that can also outperform, and they definitely did. It was similar with the others. So even LaunchDarkly is a dev tools company, but it's similarly become a phenomenon because it's become embedded into these systems where as you use it, you become more and more dependent upon it. So it's something that also has this network effect that kicks in where you're thinking about businesses where over time as they scale, most businesses, when you scale, quality goes down. And the heuristic to think about is how are there mechanics where as you scale, quality increases, the value actually increases. That's obviously true with Twitch because it's a marketplace. You have viewers, you have content creators, they each want the other. But even with dev tools, it's also the same because as you get embedded into the code, you get more value as you use it more ubiquitously. So it has these positive reinforcing loops as well. And Pubmatic was also sort of a meta ad network that was sort of being created too. So it was a combination of thinking about network effects, thinking about something that people are doing something that's different, and why is the timing now for this to take off in the short term? And in the long term, how can it sustain that advantage and become even more valuable? So those are, at a very high level, that's sort of how to think about it. So those are some thoughts.
Mm-hmm. I recently recorded an interview with Anna Sterpura, and she was part of one of the cohorts of Alchemist, I think at 2022.
And after Alchemist, she shut down her first startup. She launched a new one, and she was able to sell the company in just 9 months after the launch. And what she told me was pretty much about customer development phase, about negotiations with customers, about sales. Can you tell us more? So when founders come to you, what are the focus areas for them? Do you have some common areas for everyone, or you work more specifically with every team?
Every team is different. So, I think part of the idea behind Alchemist is that it is a smaller class, and we do that intentionally because each company is going to have different needs. So some companies are focusing on monetization, others need to focus on engagement, others need to focus on growth. And depending upon the company and even, where you're playing, if a dev tools company is really different than a health tech company, for example, and a classic inside sales SaaS company is really different than a deep tech company. It is really different. So things are different. But generically, there is a methodology, I would say, for companies when they join Alchemist on validating, getting to product market fit. So this idea of customer development, there is an Alchemist methodology or an approach to that on a protocol and how you can, if you're starting from square zero, how do you very quickly go through discovery, validation, and product market fit to get to catalyze a funding event. And there are a bunch of different techniques that we use. It is this instead of doing sort of a classic sales approach or a classic customer discovery approach, we're advocates of certain tactics like using a customer advisory board or engaging people in these other sort of alternative ways to get them engaged, and then transferring engagement to monetization and thinking really vigilantly about, the engagement, then having that drive to monetization, then having that drive to growth. So generically speaking, there's going to be different North Star metrics that you're optimizing for, and you have to know what is important at each stage. And then there's growth hacks, like on how to think those through. Everything from how do you structure your contracts so that you can show strong growth between your initial phase and your second phase with customers, and then have that dovetail into a narrative with the VCs. So those are some things. And then it's around also storytelling. That's both with your customers and with the VCs. So you take the near-term traction, you map it to a long-term strategy, and understanding how to do that, which is a really important skill. So those are some lessons.
Mm-hmm. So pretty different things, yeah? So you work more individually with every company.
Well, there is a generic curriculum. So people do come to every Thursday we have class, basically. And so there is sort of a 24-week curriculum, but then each company gets 4 coaches. So the coaches are going to work with them individually on what they need to get done. And usually the coaches there's also partners that are domain experts. So like all the dev tools companies, typically Adam Frankel, who's written a book. And if you want more, if you're a dev tools company, there's a book on the Alchemist Accelerator method where you can look through all the techniques, and Adam Frankel is the author, and Adam was the head of marketing of 3 dev tool unicorns, JFrog, Neo4j, SourceGraph, and JFrog. And you can read the whole book if you want to just get lots of tactics. But if you're a DevTools company, you're going to be working with Adam, and Adam's playbook is going to be different than, let's say, Nani, who works with a lot of the Gen AI companies. Nani was the founding chief product officer of Apogee, and which got acquired by Google for $625 million. And if you're building a Gen AI company, there's a different sort of set of methodologies. So there's different communities depending upon where you're at, and then there's a generic curriculum, and then you'll take different parts of the generic curriculum that are relevant for what you need to get done.
So what I found on your website as well, that you are focused on the B2B SaaS only. Yes, am I right?
No, we do everything. So, there's a lot of B2B SaaS because that is, what's the most popular probably in enterprise. But no, we do everything from deep tech to even consumer stuff. So like Rigetti, which was a quantum computing company, that was quantum computing hardware. The first check was from Alchemist. They went through Alchemist first, and they ended up going public. And then we have companies like Kite, which is a rental car company, which is very consumer facing. And that's, and that also went through Alchemist. So it's not just, and that's like transactions. It's not just SaaS. It can be lots of different types of business models. But SaaS is probably the majority. Yeah.
What are the main selection criteria if some founder want to get into the Alchemist? At what stage he should try?
Well, so the first criteria is the teams. So the first thing that we're looking for is the caliber of the technical founders, especially. And so if there is a technical founder, we encourage you to apply whenever you have an idea that you're passionate about. And we've had companies that have literally joined on day zero when they've started their company at Alchemist that we've admitted really because of the team. And so if there is a phenomenal team, you should just apply immediately because we want to help you as soon as you're serious. But I would say on average, if we look at our admit rates, because of the volume of applications we get, on average, companies have been working for about a year before they apply to Alchemist on the startup. And we've also had companies that are 10 years old that have been around for quite a while, and we've had companies that have also closed like $5 million rounds and joined Alchemist. So it really is a wide range, and that's partly because the main criteria is the team. We're looking for teams that we think are distinctive, especially the technical co-founders. Ideally, there's also a business executioner if that's not the technical co-founder. And then we're looking for markets if you're going after markets that we think are going to warrant the interest of the top venture funds.
Mm-hmm. Are you looking for AI space nowadays more than on others?
We're always actually, there's lots of AI right now. So the class is, if there is one theme, it is AI is probably the theme of the day. But to be honest, I'm always interested in the contrarian themes. So right now, I really perk up when I see a founder that's doing something that's different. Because usually that means that they're actually really passionate about the space or the idea. So even now, for example, I've been a fan of some of the blockchain companies because blockchain is out of vogue. Everybody is, it's now sort of in a down cycle. And so the founders that are building on blockchain, some of them are doing things that are really novel or interesting, and they're true missionaries. And I love AI, and we've funded some phenomenal Gen AI founders that are deep machine learning experts and also have been deep in different variations of AI. And so I also like that. And at the same time, you also have some people that are just chasing AI because it feels like the hot thing to do. So I would say do whatever you are genuinely passionate about. We're obviously very bullish on everything that's happening on the AI front, but we're even more bullish on founders that see the world differently. So, yeah.
Mm-hmm. So how many applications do you usually receive, and what is the acceptance rate?
So the acceptance rate, usually we're getting around 2,000 applications for about 60 admits. That's sort of what's happened. That's like the annual thing. And so the acceptance rate is usually between 2.5% and 3.5% of the companies that get admitted, that apply, get admitted. So that's those are the numbers.
And how much money you also invest?
It's so in the flagship program, it's $30,000 is the net amount of cash. We have programs in Tokyo and Doha. The Tokyo program, it's $70,000, and the Doha program is $1 million. And both of the Tokyo and the Doha programs, you'll get access. You're joining the global program. So You're joining the same flagship program. It's just that you're going to be physically in different locations. For the flagship program in San Francisco, the cash is there just to pay for your rent in San Francisco. It's not intended to be. We know the startup is going to need more money, and the intention right now is the program is to help teach how to raise and to source more money. And the value of the program, the cash is the least valuable part. The main part of the program is if you value the network and the community and the learning. But that's how it works right now.
But everyone should come to San Francisco to the program. Yes.
It's highly encouraged, yes. So we're not. So right now, we very much encourage people to come to San Francisco, especially if you're in generative AI. There's a cluster of resources that are unmatched anywhere else in the world, and you will learn a lot more if you're physically there. But we don't. It's not a hard requirement. So we're not mandating it. It's just highly recommended at this point, and we're moving much more towards more in person. But we do have companies where, because their customers or their teams are not clustered around San Francisco, it makes sense for them to be closer to their customers. So, if your customers are not going to, it doesn't make sense for you strategically to be in the Bay Area, or from a team perspective, you can also participate in a hybrid way where you attend the weekly classes virtually. And then we have 2 retreats during the program where you can fly in for these 4 to 5 day intensives. And just participate, fly in for different retreats and then fly out. But we do want everybody, if you can, we encourage people to be in San Francisco. Yeah.
What kind of retreats do you have?
They're really fun. So it's basically 5 days where you're in San Francisco, and it's a combination of mentorship. So there's workshops that are put on by different Alchemist partners and mentors and thought leaders, as well as an alumni reunion. So the alums will come back too, and they'll also give guidance and help to the current founders. And then peer social events and networking where just you and your batchmates and are going to be together. And then there's also investor events where we invite the investor community in to interact with the class. So that happens over the course of 5 days. Usually people will also couple that with a bunch of business development meetings and other things.
I heard about the boot camp or camping that Draper University is organizing for their entrepreneurs. And it's pretty intense what I heard, and also different from what you just said, what you do at Alchemist.
Yeah, no, I think that's throwing, if that's what I'm thinking of, that's where Draper throws you out into nature, which is also a really terrifically fun experience. We have our own sort of hazing events, or we have our own initiation events. But it's not a survival quest. So that Tim Draper, that is classic, and Tim's amazing. That's a survival quest. This is a little bit more focused on just tactics for startup building.
Okay, so when founders come here to Silicon Valley, right now, for example, we have hundreds of events every day. And recently I met a few founders that just right here, and they say that when they go to those events, they just meet other founders. So founders speak to founders about what they are working on. And they were like, we expect to see investors. So, they feel like they are in the wrong room and they are here already. What would be your advice? How to be guided in the right way, to be in the right room, and to increase the ROI of every visit here to Bay Area?
I would really move to the Bay Area if you can, to be honest. So if you are serious as a founder, I do think there's a lot of value that you get just by being physically in the ecosystem. If you can't do that, you do need to find a way to navigate to important meetings, which are going to be the investors and the maybe strategic partners. Obviously, that's why Alchemist exists. That's why a bunch of these other accelerators exist, is that they provide a structured path towards that. And, we have the same, we have a whole team that just focuses on building relationships with those investors and then having, connecting in the startups that are appropriate to each of the investors that we're connected to. If you're doing it on your own, it is always best, if you can, to try to line up meetings in advance. And I would think about a strategy on how you get into the investor. So I would be deliberate about it. Part of this might be finding a precursor step to the investor. If that's not an accelerator, that could be other founders that investor has funded. and seeing if you can, build relationships with them, because those founders can connect you into all their investors, especially if they're non-competitive, but in similar spaces. And then think about ways that you can sort of create signal to those investors. It's also good just to do research in advance. And if you do have a really well-crafted email, that can convert, in our experience, up to 30% of the time cold if you actually find the right investor who cares about your area and just email them in advance. The other hacks around this are, if there are a bunch of events or conferences and everybody who's there, they're all founders, it's likely the people that you're trying to connect into are the people that are the speakers. Like, they might have investors that are speakers, or investors that are, in some VIP session. And if they're advertising that, you can also reach out to the investors just separately and just say, hey, I was at this event. Even if you didn't go to the event, you can say, I was at the event and I was trying to connect with you, but I didn't. Would love to spend 20 minutes. Here's what we're working on. And just do that even in advance of actually going to the event, and see if you get connected in. But I would try to line up the meetings before you come to Silicon Valley if you're not going through a structured program, because they're not going to just automatically appear. Because even to the investor side, if they go to a generic event, they're just getting inundated with founders, and that's also not a pleasant experience. So they also are looking for a filter. They're looking for something that can, validate which startups make sense to connect with. That can be organizations like Alchemist. It can also be proxies that they trust, like the founders that they've funded, other investors that are earlier stage. So if you can get funded by like a seed fund or an angel, they can connect you into their investor network. So think about the connection points that can create signal.
And how to understand is your business strategy and your presentation is well enough to be presented to others? How would what would be your advice to entrepreneurs who are going to visit San Francisco?
I mean, the first thing is, I don't think it's helpful. So first of all, being an expat or an immigrant into the United States is correlated with success. If you look at Endeavor did this study on the top U.S. unicorns companies, and over 55%, I think 60% of U.S. unicorns have an immigrant founder, or I think a first generation American founder. So the first thing to understand is that being an immigrant is not the exception to success; it's actually the rule. Okay, so it's good to know that, but I do think there's a danger if you come to Silicon Valley and say, "Hey, I'm here on a trip, and if you fund me, I'll move here." You won't get funded because they'll punt you back. They'll assume that you're from wherever country you're coming from, and they'll connect you into an investor there. It's very different if you're physically in the Bay Area and you say, "Hey, I'm a U.S. company with operations in wherever you are operating out of," instead of I'm a Czech company and I'm thinking about expanding to the U.S. So framing it that way, I think, is really important, and also even physically being here is helpful. But I would frame it that you're an American company and that you have operations wherever you're at. And then I would, the old adage, if you ask for money, you get advice, is true. I think if you just ask, if you fundraise as your first step, it'll be very difficult. I think it's easier if you actually just get feedback and just, "Hey, I'm working on this new company. We're not planning on raising for another 2 quarters. Would love to just get your advice." And then if they are interested, they will automatically invite you in for a second meeting, and then you're fundable. And if they continue to just give you advice and they don't pull you into a second meeting, then you need to work on that if that's consistent advice that you're getting from at least 10 different investors. So those are some things. Yeah.
I think if you have another meeting with the investor you have met before, it's already a good sign. Because usually if you are not ready, investors just ignore you because they don't have time to teach you. You need to find some educational program.
No, that's exactly right. And so that's the heuristic that I was trying to get at, was instead of saying, "Hey, do you want to fund me?" just ask for advice. And if the investor, the way that you're fundable is if the investor is going to commit their time or another member of their team's time with you. So that's the signal. So, when you meet with an investor, if they say, "Hey, let's have a second meeting," or, "Hey, I'd love for you to meet one of my partners," they're saying you're fundable. So you just need to get that signal. But if you go out and you say you're raising and they don't like you, then they're going to say they declined you, and then it's hard to go back. So just get the meeting for advice, and you might need to get that meeting through an intermediary that they trust, saying, hey, this founder is working on something great. They're not raising right now, but I'd love for you to give advice, and then they'll meet with you and then see if they pull you into a second meeting. So go for advice first, get the meetings lined up, and then see if the investor is so intrigued that they bring you into a second meeting. That's the best way to know. And do at least 12 meetings if you're really trying to validate that. And if you get consistent no's across all 12, you probably need to work for another 3 months and then go back and raise again.
And when you meet founders at some events, how can they catch your attention? What should they tell you?
What honestly helps me is that if they've done their research, so if there's a connection point where they say, hey, I know this person who obviously knows me, especially if they know of another Alchemist founder, and they reference that and they say that, hey, this founder encouraged, thought that spoke really highly of the program, or thought that I should apply. That is a good signal for me because that suddenly distinguishes them from other people. If they can signal anything in that quick interaction that shows distinction on how they're different up front, that is always super helpful. That can be based on background or traction or a common connection point. So putting that up front is super helpful for me. You can always play in demand, like saying that, hey, we're in talks with other investors or other initiatives, and I was curious to get your advice on how I should deal with these people. That also can be intriguing. And then just anybody who's deeply passionate doing something original and just very thoughtful and conscientious, those can also be helpful.
How often do people start their conversation with trying to tell you more about the solution they built?
Oh, that is the norm. Yeah, that is, of course.
What do you think about that? Is this the right approach?
It's not the right approach if it's going to take too long. So what's helpful is if you front load it with what your intention is with the conversation, what you want to get out of it. So the really dangerous part is that when somebody is trying to explain something, and I don't know how long it's going to take to have the conversation, and I don't know what their intention is out of it. If they put it up front, it's really helpful. So if the upfront thing, for example, is, I'm interested in applying to Alchemist, I don't need to know the full details of what you're doing. Or if, I'm curious if I'm a fit for Alchemist, then that can help set the context for me to understand what question the founder is trying to get addressed. So putting the question up front is a huge service to if you're talking to an investor up front, and if it's genuinely like, I'm wrestling with a strategy question, and I'm curious what I should do, whether I should go, horizontal or vertical. Can I tell you about what I'm doing? Then that's really helpful. The danger becomes when somebody just comes up to me and they just start going off on, their solution approach, and they can be speaking for on and on, but with no end in sight in terms of what they're trying to get answered. Then it's difficult then for if it's me or whoever you're talking to understand how to help.
Yeah, I think this is one of the most common pitfalls about the pitch. What are the other most common pitfalls you see on the early stage journeys of the founders?
I mean, there's lots. So it depends on, the biggest pitfall, not about fundraising, but just in general is that people build a product before they validated if the need exists. So, that's the classic pitfall. So everybody's always tempted to build because you can control building. It's fun to build. It feels like you're making progress. That is the fundamental issue that separates founders that succeed and those that don't, is before you build that, assume you've already built the product. What's your next step? And take that next step now. So if that next step would be to show it to a customer, go talk to that customer now and validate that they would actually engage or use the product before you actually build it out. So that's classic fundraising. I think the other big problems that exist are making sure that you're hiring amazing quality talent for your first 5 hires. So, your bar for your hires should not be somebody who's good at what you don't like. It needs to be somebody who's as good at what you do. I should say that the bar is not somebody who's better than you at what you don't like. They have to be as good in what you don't like as you are in what you like. So the biggest mistake is that people don't know what good looks like. And so before you bring on, a teammate, go interview 3 rock stars that are that role that you think you want, and have them create the spec with you. If you hate sales and you need to get sales, go meet with 3 amazing salespeople and have them write the spec for you instead of hiring your friend who's, better at sales than you. So I don't know if that made sense, but I think that's the second biggest mistake is if you are fantastic, is keeping the bar equal, if not higher, for the other people that you bring onto the team. And then it's learning storytelling. There's a lot of power as a CEO in being able to pitch and being able to articulate a great story, and being really able to be masterful at that is super helpful too.
Mm-hmm. What do you think about?
Yeah.
Mm-hmm. Thank you very much. Yeah, I totally agree, especially about the first thing you mentioned. And so when the people build product first and then try to sell, they don't have anything else to pitch you as investors, so they can only speak about the product. And this is actually hilarious. It's a large problem. What would you build yourself if you would start a company today? What would it be?
I would go in a different direction. So I'm a very big fan of swimming, being dominant in a market that might be a niche that nobody really understands right now, that will emerge in 3 to 5 years. So, I think it's not so much what, to the extent that it's supposed to help other people, I wouldn't just mimic what I would do. The thing to do is going to be something that only you're uniquely suited to get done. But, I'm very intrigued right now, as I was saying before, there are some blockchain opportunities that I think are actually pretty exciting right now, because everybody's disregarding blockchain. I think space tech is really actually fantastic. It's going to be really, there's a lot of opportunities that are going to become even more pronounced in the next 3 to 5 years. And I think there's a lot of talent that you can create now to create just a cluster of phenomenal engineers that want to work on something different, So I would go into markets where it's not where you're swimming against the storm, and everybody's right now is doing generative AI. Generative AI is fantastic, but if you're not doing that out of an authentic, genuine interest, I think it's good to sort of look at these other spaces that might be orphaned. I think quantum is sort of interesting right now, even though most people would disagree with me on this, on the timing of quantum. Like, now is the time to, hopefully in the next 10 years, quantum's going to have its AI moment. And I think if you can start to work on some really fantastic foundational things there, then it'll be too late for anybody to catch up with you. But you have to sort of jump in when everybody right now thinks you're crazy. So I like going into these markets that don't seem right right now. And that's sort of where I like to swim. Yeah.
Yeah, but it's quite complicated to jump into space field, for example. Even Elon Musk had to build PayPal before and sell it and invest his first 100 million into SpaceX before he could convince other people, to join as investors.
But it's not as risky as when DFJ, where I was at, we funded SpaceX. And I was in the room when there were lots of conversations on cash with SpaceX and with Tesla. And yeah, you're right. It was tough. But there was investors. DFJ did come forward, and it's not as bad as it was when Elon Musk started. So, you can choose which industries you think are interesting. But yeah, I would go into the non-sexy. I'm a fan of the unsexy industries to start now. Yeah.
Very good. Okay, Ravi, thank you very much. Really appreciate your time. You shared a lot of valuable insights. Your experience is really super interesting. Just as a closing remark, give us please 3 short advice for entrepreneurs.
And these are going to be, I'm just going to mirror what I said before on the 3 things, the mistakes to avoid. So validate the need before you build the product. Surround yourself with people that you're too scared to ask to join. So, you should be finding people that when you ask them to join, you don't feel worthy enough to ask them. That's the bar. And then master storytelling. Just practice the art of storytelling. So those 3 things.
Cool. Thank you very much, Ravi, and wish you all the best.
Thank you, Vasil. Thank you so much.
Thank you guys for watching. It was a pretty insightful interview, I think, and I hope you will benefit from watching this content. Please don't forget to subscribe. Just make sure you don't miss the content, we produce it for you. Ask your questions in the comment section, and thank you very much for being here with us.